All right, let's go ahead and get started. My name is Lisa Rodriguez. I am the Director of Retail National Accounts here at Newview Trust. And today's webinar topic is going to be on finding deals in a tight seller's market. I do have to do a couple of slides before we get to the good stuff. As a disclaimer, we must confess that we are not attorneys or CPAs. We're not financial advisors. We are not a fiduciary. So all information provided today is strictly for educational purposes. And we encourage you to always consult with your attorneys and tax advisors, financial advisors before entering into any type of investment. Who is Newview Trust? So Newview Trust is a full service regulated public trust company, and we are a custodian. So very similar to Schwab, Fidelity, Ameritrade, whereas we custody IRAs. The difference between us and them is that they custody IRAs that are investing in stocks, bonds, mutual funds. And for us, we specialize in alternative assets such as real estate or private notes, private lending. So we've been in business since '03. We currently custody about 1.5 billion in client assets and have over 10,000 clients. And we do pride ourselves on being simple to do business with, available to our clients, and responsive. We have our 4 core values: they're passion, integrity, service to others, and accountability. So we do hold ourselves to that for you, our clients. Today's speaker is Andre Johnson, and he is going to be speaking again on finding deals in a tight seller's market, and just a little bit on Andre. He's an active real estate investor, owner of several businesses, and mentor to hundreds of investors. Since 2000, Andre and his companies have had well over 500 real estate developments and private placement transactions nationwide. Andre and his partners are experienced private lenders for rehabs, rentals, and multifamily properties. As a mentor, consultant, and founder of Deal Mastery, Andre has helped a number of investors achieve their cash flow and wealth building goals through strategic relationships, resources, and real estate systems. Andre engineered Deal Mastery's Deal Finders Funnel, a cloud-based marketing software to help investors automate their marketing and do more deals. So without further ado, here is Andre Johnson.
Hey, Lisa. All right, so we're going to go ahead and get started. Thank you, Lisa, for that introduction. I'm going to now get into the content you came for today. That's finding deals in a tight market without relying on realtors, wholesalers, brokers, auctions, or other retail price sources. So let's go ahead and get into the content. All right, so I want you to engage in this webinar. I want you to ask questions, use the Q&A feature here. I'll take questions at the end of the presentation, but I love to get questions and engagements from attendees. That way I can circle back to you, make sure I drive home the points in the training today. Again, I am Andre Johnson, been investing for 20 years, mentored to thousands of investors, owner of several businesses, completed over 1,000 transactions since I started. Very humbled to hit the #1 best-selling author position in a very highly competitive position on Amazon in the real estate investments category with my book, Deal Mastery, Real Estate Investing Guide to Finding Deals, Joint Venturing, Taking Massive Action, and Leaving a Legacy. And just very humbled to hit that #1 best-selling author position. I am the CEO of Deal Mastery, which is an ideal to master real estate investing through proven resources, strategic relationships, and expert real estate strategies. And I do run a national meetup, Deals Meetup, that has over 80 Deals Meetup networks across the country. And we have over 80,000 investors and Deals Meetup community that look to find deals, pitch deals, network, partner, and invest. So as far as what I've specialized in over the last 10 plus years is really providing the resources to help investors to identify good opportunities. We joint venture partner with investors, co-wholesale properties with investors nationwide, have helped real estate investors, small businesses and corporations to make money with cost-effective marketing funnels and leverage affordable technologies in today's market. Stick around to the end of the presentation. I do have a very valuable bonus for you for free. It's over a $2,000 value, so stick around to the end. All right, so if you're on this webinar, you clearly have an interest in finding deals. Maybe you are chasing deals right now with no deal flow because it is a very tight market. Maybe you feel like there's too much competition out there for good deals. You might possibly feel as though you're frustrated with working with real estate agents, realtors, or wholesalers looking online to find deals, or possibly even stuck not knowing how to generate quality deal flow on a consistent basis. The fact that you are an account holder with Newview, you probably have completed one or at least a few deals in your career, but maybe you haven't, perfected the process of finding, negotiating, and closing deals on a consistent basis to your liking. So it took me 18 months to realize this, that if I were to rely on realtors, brokers, wholesalers, auctioneers for my deal flow, that I was never going to be able to take my business to the levels that I wanted. So you're really not going to achieve the lifestyle, financial freedom, or personal happiness you want and deserve until you start looking for deals going direct to the seller. We're going to get to that here in a bit. So again, I want you to use the live chat, throw in the live chat comments on how you are finding deals right now, or the frustrations you may have with finding deals. I'm going to circle back to you, answer those questions, engage with you at the end of the presentation. So here's the problem with relying on the MLS or wholesalers. Okay, that's what most investors do, is they rely on real estate agents, brokers, or wholesalers to find deals. When you source your properties exclusively or primarily from the MLS, realtors or brokers, or wholesalers for that matter, you're always going to be paying retail, because the MLS and wholesalers, they essentially price properties to the max potential for that particular property, therefore cutting out a lot of profits, that would be on the table for you if you were to go directly to the seller. So you inherently are dependent on those MLS listings, those wholesalers for your deals, and it's going to really hinder your ability to scale. You have no direct contact with the seller. You have no ability to negotiate directly with the seller. And it becomes very, very hard to get deals done when you have that intermediary, that middleman, a wholesaler, a real estate agent, a broker, or auctioneer. And hence, it's very unpredictable when your next deal is going to come in. It's unpredictable what your income stream is going to look like month to month, quarter to quarter, year to year. So this is what I've seen in spending between $20,000 and $60,000 a month in direct to seller marketing, folks. Between 2002 to current day, we've had marketing budgets anywhere from $20,000 to $60,000 a month doing direct to seller marketing. And that direct to seller marketing has been a marketing mix of bandit signs, those yellow "We Buy Houses" signs you see on utility poles, television commercials, radio commercials, other forms of direct to seller marketing, trying to create the perfect deal finder's funnel. And so what I've seen happen is that when you go direct to seller, you're able to control the process. You're able to control the engagement with the seller. You start to have sellers calling you or texting you, asking you for more information about your services in terms of acquiring properties. So when you decide and you make the decision that you're going to take your real estate investing business into your own hands and control your own destiny, you can do that by direct to seller marketing. You can target sellers that are motivated to sell because they have some distress with the property or themselves in their life. You can market directly to these sellers, target these sellers in your targeted area, wherever you are in the country. We'll get to that in a second. So you'll have sellers calling you in response to your, are you selling marketing messages. These sellers will call or text you or go to your website, and they literally will be begging you to give them a call back, because they'll look at you and your company as the shining white knight on the horse, able to solve their problems that they're in. You'll be able to creatively structure your own offers to make win-win deals with sellers. It doesn't have to be a win-lose. You win, the seller loses, or the seller wins and you lose. No, when you talk directly to the seller, you can structure creative deals that are win-win deals for you and the seller. And then ultimately, the most important part is you're able to scale your deal flow, because when you market directly to sellers, you're only limited by your marketing budget and the number and types of sellers you're able to contact with your direct to seller marketing. So what exactly is a deal finder's funnel or direct to seller marketing funnel? Well, a deal finder's funnel is going to be your cost-effective automated marketing system that helps you to find off-market sellers in your targeted area, qualifies them as highly motivated leads, and automates the follow-up process. You can get properties under contract that you want to purchase, wholesale, fix and flip, to BRRRR, which is known as fix and hold, or to exit with whatever preferred exit strategy that you desire. And the cool thing about marketing directly to sellers is that you still can use your self-directed IRA accounts to fund those deals. Now, with direct to seller marketing, we call it a deal finder's funnel, seller marketing. You start with a targeted motivated seller list. We're going to dive into that in a little bit in terms of what types of motivations I prefer. But you start with a targeted motivated seller list in your targeted area, and you have to make sure you get contact information for them, be it phone numbers, mobile numbers, landline numbers, mailing address, email addresses. And then once you have the contact information, you can contact them by multiple modalities, whether it's cold calls, ringless voicemails, follow-up text messages, automated drip postcards, yellow letters. All of this is within the realm of a marketing mix, mixing these marketing channels, marketing methods to maximize your lead conversions, to get more motivated sellers calling you, texting you, emailing you, going to your website, requesting you give them a call back so you can talk about solutions to their problems. So this is schematically what it looks like. Essentially, what I just referred to, you're going to build a targeted list of motivated sellers in your targeted area that represents the people on the upper left-hand side of the screen. And then you're going to send them, are you selling prospecting messages? Again, it could be a mix of cold calls, ringless voicemails, direct mail pieces. And then you're looking for those sellers, the ones that are motivated to respond, either respond by going to your website or whatever call to action you put in those are you selling prospecting messages. And then when they respond, they become a contact. And then, of course, you have to take them through a sales cycle, just like any other business. So when they respond, they become a contact. Then you or one of your virtual assistants or virtual workers or staff, you have to qualify them, see how motivated they are, and qualify them as a lead. Once you qualify them as a lead, getting their name, contact information, address of the property they want to sell, maybe how long they've owned the property, what their motivation for selling, why they're selling, when they have to sell by, possibly even some deeper questions along the lines of how much they owe on the property, are they behind on mortgage payments. This qualifies them as a lead. Then ultimately, those qualified leads, you can start to negotiate directly with the seller. That's the cool part of direct to seller marketing. You can negotiate directly with the seller instead of going through a middleman like a real estate agent, realtor, wholesaler, et cetera. And there lies the opportunity to maximize profits, because you make money, as you all know, in real estate when you buy. So being able to negotiate directly with the seller locks in your profits with your offers. And of course, you make so many offers, you wind up with contracts that are ratified and you get to closing. So essentially, this is what direct to seller marketing provides you. It is without a doubt the best way to find deals in today's market, because we all know the inventory on the MLS is really, really tight right now. So just carrying this forward, this is what the targeted list motivations look like. So I referenced, I was going to dive into this in a little bit. And so here we are. This represents about the top 10 or so motivations that I see that is working in today's market. You have so many owners, property owners, that have went through forbearance with their lenders. You have so many property owners that have tenants that have tenants behind on rent payments. So you have moratoriums on evictions, you have moratoriums on foreclosures that have really created a bottleneck, a shadow inventory of distressed sellers, distressed property owners in today's market. And so right now is the perfect time to be marketing to people that are behind on their mortgage payments, marketing to absentee owners of rental properties that may be frustrated with their tenants not paying or paying at a reduced rent amount. So vacant property owners, absentee owners, that is landlords or property owners that have tenants that are behind on payments, tenants that are going through the eviction process. These are all very good motivations to target with building your targeted list and doing your direct to seller marketing. So how do you go about doing direct to seller marketing? Well, you pick, one or two or three of those motivations I just covered, and then you pick those motivations in a targeted area where you want to buy properties, fix and flip properties, wholesale properties. And then you just create a list of at least 5,000 to 10,000 records. Those properties could be residential, commercial, retail properties, multifamily, whatever property types that you want to buy, fix and flip, or wholesale. You generate a targeted list of those properties of at least 5,000 to 10,000 records. Once you generate that list of 5,000 to 10,000 records that meet your criteria, then you go into marketing towards those lists. I'm going to cover exactly in a few minutes exactly how you market to them. But why do we start and recommend you start with absentee and or vacant properties? Because typically these property owners are tired of dealing with the property. They're tired of landlord tenant issues, especially in today's market, as I mentioned, where so many tenants have either been late on their rent payments, have lost their jobs. There's so much financial distress with property owners and tenants. When you market to absentee owners where they are tenant occupied, you're going to come across many of these owners that want to sell their properties. A lot of times these absentee owners that have tenants in them, or they're vacant, they're dealing with maybe vandalism issues. Maybe they are having cash flow problems. These all represent financial distress, in some cases emotional distress, that an owner is dealing with, which is going to set up an opportunity for you as the investor to make a win-win offer to buy their property. So again, just to recap, we see in today's market that targeting vacant houses, targeting houses where there's issues with tenant payments, properties going through evictions or landlord-tenant court, properties that are behind on payments, pre-foreclosures. These are all great motivated seller motivations to target in today's market. So what is a pre-foreclosure? I think is self-explanatory. Essentially, pre-foreclosures are properties where the owner is behind on payments and the lender has sent some type of notice to the owner that's recorded in public record to say, hey, you need to pay us, get current, or we're going to start a foreclosure process. Those owners are very good to target in today's market. Another strategy, it's a really killer strategy that we use, that a lot of our funnel clients use for direct-to-seller marketing purposes, is doing something called list stacking. Now, when you take multiple motivations, let's say, for example, an absentee property, that is an owner that doesn't live at the property itself, you take that motivation of being absentee owned, and you take the motivation of being a pre-foreclosure, being behind on payments, you combine two variables at the same time. It's called list stacking. It gives you a much more highly targeted, more highly motivated property owner that is really motivated to sell the property. When you do list stacking like this, you will find many times the owner is very motivated to sell their property, as compared to, for example, someone that is current with their payments, getting consistent income, maybe from a rental property, or maybe has a lot of equity in their home and is very much willing to just wait for the highest price offer. And a lot of times those owners, conversely, will list their property on the MLS. If you list stack for motivations that are characteristic of owners in distress, like I said, pre-foreclosures, dealing with evictions, maybe going through divorce, maybe inherited a property, combine multiple motivations like that as the process of list stacking, you'll find opportunities for you to make offers and get properties under contract with equity on sale or properties with discounted cash flow. Okay, so we're now looking at what I consider to be the Deal Finders formula. So this formula is going to help you with your direct-to-seller marketing. Again, Andre Johnson here. We're talking about finding deals in a tight market. And so to find deals in a tight market, you're going to be best served by marketing directly to sellers. If you are just resigned on waiting for your favorite realtors, waiting for your favorite brokers or wholesalers to send you good deals, you may be missing one of the best opportunities in recent history to find deals, especially when everything comes to bear with these forbearances and banks saying, hey, pay up, time is due, or we're going to take you to foreclosure, or when moratoriums are lifted on these evictions. If you wait for your real estate agent, your wholesaler to bring deals to you, you are going to be missing out. You have to target these motivated sellers by going directly to them with your "Are you selling?" messages, whether it be postcards, yellow letters, cold calling, ringless voicemails. So this is the process. I consider this to be the Deal Finders formula. You start with a targeted list of the motivations we've covered. You then have to skip trace that list. You have to get contact information for those potentially motivated sellers to contact them. After you get the contact information, whether it be mobile, landlines, then you can actually use cloud-based systems. There's many of them out there right now where you can upload a list and you can have a virtual assistant cold call that list. Once you cold call that list, you'll be able to follow up with email follow-up, text message follow-up for people that respond to your "Are you selling?" messages. The people that respond, as I said before, become qualified leads. And then it's a process at that point of just like any sales process in any business, it takes multiple touches. You're not going to reach out to, John Doe, property owner of 123 Main Street, and have them sell you a property off the first point of contact that's going to have, a great cash flow or a great upside with equity. It usually takes multiple follow-ups. We see it takes at least 7 to 14 touches for an owner on average before you're able to reach a negotiation to the point where you get a property under contract that you want to buy, fix and flip, wholesale, or whatever your preferred exit strategy is. But if you walk through this Deal Finders formula that you're seeing on the screen, start with the targeted list, skip trace to the list, use an auto dialer to then call and reach out to these prospective sellers in bulk, have initial "Are you selling?" prospecting cold calls, follow up with text messaging, voicemails, and then do marketing follow-up, drip follow-up with all the different marketing methods I mentioned earlier. Then you're able to then close on the types and scale of properties that you want. And of course, you can then partner with investors using their self-directed IRAs and things of that sort to take down a number of properties and deals that you want to take down. So what type of contract, do you use once you find, these motivated sellers? So unlike, when you are making offers on properties that are on the MLS, a lot of times you are confined and restricted to just making offers based on price. You bid a low price, typically the seller says no. You bid a higher price, now you're in the ball game competing with other buyers making, offers at the highest price. But when you actually are doing direct to seller marketing, you have the flexibility to not only negotiate on price, but also to negotiate on terms. So you have the ability to then ask the seller to maybe hold a note or a seller carryback. They receive some of the sales price at settlement and maybe wait a few years or so to receive the balance, commonly known as seller financing. So the cool thing about marketing directly to sellers with direct to seller marketing is you do have flexibility and control over the price and term structures of your offer. That's one of my favorite parts of doing direct to seller marketing, is having control of the terms and the price of the offers that you make. And a lot of times you'd be surprised, sellers are very open once you build some rapport and allowing you to buy their properties with flexible prices and terms. So there's many different strategies that you can use in terms of price and term offers. Seller financing, I mentioned, taking over a seller's payment by buying the property and keeping the existing mortgage on the property. That's called subject to the existing financing, and many different strategies, that allow you flexibility to buy properties at your preferred price and terms. So there's different, clauses, different contract types that we use for different situations, whether it's an option to purchase, a land installment contract, also known as a contract for deed. All these different strategies just give you tools in the toolbox to be able to maximize, the leverage of the funding in your self-directed IRAs. So which contract do you use and when? Well, it really depends on the owner's situation, of course. Some owners are looking for a fast sale. Some owners are looking for top dollar. You can play those two off one another. If they're looking for top dollar, a lot of times you can get away with coming with some creative financing or terms on the back end, like seller assistance or owner financing. And of course, for you as the buyer, or if you're working to wholesale a property, your wholesale buyer, what's your motivation? Is your motivation a rental? So you're looking for cash flow and then secondarily, maybe cash on cash return. Maybe, your buyer motivation is not cash flow. It might be looking for flip profit. So the type of contract you use depends on, of course, what your goals are, what your motivations are, and of course, what the seller's goals are and what their motivations are, and you can work out a win-win scenario. So this is what we see that works best when you're doing direct to seller marketing, is you have to go through a call scripting process, right? So if you're going to find deals in today's market by doing direct to seller marketing, you have to use scripting. You have to follow, proven processes to qualify deals. Here's an example of using a call script on a absentee out-of-state owner. So absentee out-of-state owner, a property that was in pre-foreclosure. This property is in Baltimore. The owner was in Virginia. Again, owner in Virginia, property in Baltimore. And just going to quickly go through this here. And you can see here, the owner said why he's selling. I'm tired. I don't want to look after it anymore. And that's what you'll commonly see when you do direct to seller marketing. A lot of times you're able to work out, creative deals with owners that are speaking to you directly, as opposed to going through a middleman like a real estate agent, or a realtor. Here's the results of that particular direct to seller marketing effort. This particular property, 3316 Lindale Avenue, was put under contract directly. There was creative financing terms that were negotiated. The property was purchased for $72,500, but the owner was willing to receive $30,000 of that in seller financing, basically paid 2 years later with a 2-year balloon. So what does that afford you as an investor if you're buying this property directly, or if you're trying to wholesale it? It affords you the ability to have better terms, in this case, bring less money to the table, when you're actually looking to buy the property. This property actually was not purchased directly, it was wholesaled. So again, that purchase price is $72,500. This particular property under contract for $72,500. The wholesale buyer in this case actually paid a $7,500 wholesale fee and was able to 100% finance this transaction. This particular purchaser actually got a $50,000 loan and then added the $30,000 seller financing, which totaled $80,000, which is the total of the $72,500 plus the $7,500, 100% seller financing. Okay, here, try to get this to move forward. Okay, so again, price terms, which contract do you use? It really depends on, your education base, your ability to negotiate and propose creative offers that solves the seller's problems. You're only limited, when you market directly to the sellers, you're only limited by your knowledge base and your creativity. Because many times we've had sellers accept our offers where our price was not as high as another buyer's price. But you have to first listen to sellers, build rapport, and then come up with offers that solve their problems. Okay, I'm going to walk you through one final case study. This is a property where we did direct-to-seller marketing. We actually, I say we, one of our clients did direct-to-seller marketing, and we just consulted and helped them through the process. It's a $45,000 case study. It was an out-of-state property owner, vacant property with an expired listing. Again, if you recall earlier, this is the process of list stacking. So there were three motivations present at the same time. An absentee owner, the owner actually happened to be out of state. It was an expired listing. They tried to list the property in the MLS and it didn't sell. And the property was vacant. Three variables present at the same time, which made this owner very motivated. Okay, so here's the property, 4006 Springdale in Baltimore. It was off market at the time. Again, our funnel client marketed directly to this particular owner. It was listed more than a handful of years ago, but the property was vacant. And by it being vacant and previously had been listed as and then taken off the market as an expired listing, our funnel client knew that this particular owner was going to be likely very motivated to sell the property. Again, multiple motivations taking place at the same time. A vacant property owned by a person that lives in New Jersey with the property in Maryland. Property in Maryland, owner lives in New Jersey. So that's an absentee owner. And the fact that it was an expired listing, the owner previously tried to sell it and it didn't sell. Those three motivations present at the same time represent someone that's very likely, high probability of being distressed and motivated to sell. You can see this property was wholesaled not too long ago for a $45,000 wholesale fee. Folks, these types of deals are out there all around the country, but it's only going to happen if you decide to take your real estate business into your own hands in terms of controlling the scale and growth of your business by marketing directly to sellers. As long as you are resigned to waiting for your favorite real estate agent, waiting for your favorite wholesaler to send you good deals, you're going to be waiting a long time. You have to market directly to sellers to get the best deals in today's market. Okay, so as we wind down today, going through this Finding Deals training webinar, you can say, Andre, that was great information. I know I've been relying on real estate agents, brokers, and wholesalers, and I haven't been getting consistent deal flow. And you know what? I'll just go back to trying to figure it out all by myself, all on my own, and going back to my favorite real estate agent, John or Jane, and just wait for another good deal. Or you could make this a defining moment and you could say, you know what, Andre, I really want to know what the next steps are to build out a blueprint that will help me to find quality off-market deals in my market. And if that sounds like you, if you're interested in finding out how you can market directly to sellers to find quality deals in your market, I would recommend that you get on my calendar for a free strategy session. Go to reigoals.com, reigoals.com. So this is the free bonus I promised at the beginning of the presentation. I have a free training at reigoals.com. It'll show you exactly how we take our funnel clients through the process of not only targeting motivated sellers, but building out the systems that you need to find these motivated sellers, and then leveraging the resources is going to help you to have the machine running so that you can continue, on your day job or running your other businesses and then letting your real estate business work for you. So you can, again, schedule this free strategy session at reigoals.com. So that concludes the training today. Hopefully this has been very educational and informative. Again, my name is Andre Johnson. I try to deliver in 30 minutes of time, at least some semblance of a good, clear picture of how you can find deals in a tight market. If you continue to rely on real estate agents, wholesalers, brokers, auctioneers to find good deals in today's market, you are going to be waiting a long time because it's a very tight market, very low inventory. The only way to find good deals in today's market is to go directly to the seller, and you can market directly to the seller with the systems and the strategies that we covered today. And you can, reach out to me. I'd be glad to talk to you about your business and help in any way I can. You can reach me at dealmastery.com or get that free strategy session at reigoals.com.
Thank you so much, Andre. We really appreciate you coming and teaching us so much in such a short time. I know it's a lot, but we really do appreciate it. We do have a couple of questions. Remember, anybody that has any questions, please put them in either the chat or the Q&A function. I do have a question here, and it says, leaving my favorite area to buy in B property in a tertiary market, would you prefer to buy local? Would much prefer to buy local. That was a comment, not really a question, I guess.
But I'll just respond to that. So I would say this: there's so many people in high price markets, Lisa. So you're going to have clients that are, let's say, in the Bay Area of San Francisco and Oakland, California, and those folks there may say, you know what, there are no good deals in my market. So what do I do? And so therein lies a dilemma. Of course, we would all prefer to own properties, within a stone's throw of our house, in our backyard, so to speak, right? But it's not always possible, especially if you are an investor looking to buy and hold properties, looking for cash flow. If you're in an area where within 2 hours of your house, you can't buy anything that cash flows, does that mean you're not going to invest? So ultimately, some of you are forced to invest outside of your market because of where you live, and that's okay. You just have to have the right resources, the right trusted relationships, and the right expert real estate strategies in order to, cash flow and hold properties outside of your market. And it can be done. Many people do so.
Okay. And then we have, what tools do you recommend for creating target lists or motivated seller, lists, good lists is what it's saying?
Yeah. So I'm not going to endorse any specific, platform, so to speak. But I will just say this: if you Google, real estate targeted list, real estate data sets, there's plenty of tools out there. I'll throw one out there. So I've used this platform, List Source, since 2002. It's owned by CoreLogic. And what you'll find, though, however, is those data sets can be pricey and expensive. And that's not, on List Source. It's just data in general, data at large, any market, any industry. Data is expensive. And that's because data allows you in any industry to very laser focus on your prospective customers. And of course, if you manage and then manipulate and then target that data effectively, you can turn that into a lot of sales and good profits for your business. So if you want to talk to me or my team about that, you can contact us and then we'll try to help you with that.
Okay. Let's see. Should I go to a small private lender for funding?
Great question. So it doesn't matter how much money you have or don't have starting out or trying to build your real estate investing business. Ultimately, you're going to realize really quickly after acquiring a few properties or even acquiring maybe a multi-unit property that you're going to run out of your own cash. Doesn't matter, again, how much money you start with or how little you start with. So if you're looking to grow or start your real estate business, just accept the fact that you're going to have to raise money at some point in time in your real estate investing career. So yes, embrace, small private money partners, embrace, private money partners, embrace money partners at large. It could be leveraging someone's credit, someone's cash, someone's lines of credit. And of course, you could be leveraging someone's self-directed IRA or qualified retirement plans, as you may know folks like yourself as account holders with NewView.
We have another question. Does any of this apply to finding NNN leases, triple N leases in a 1031 exchange situation or commercial deals?
Yes. So ultimately, it doesn't matter what type of properties. I tried to touch on that in the presentation. It doesn't have to be just houses. Most people think that when you go to market for direct to seller marketing, that it's only a residential thing. Ultimately, when you are marketing for opportunities, it's going to be targeted towards not only the area that you're marketing towards, but the types of properties that you want to buy, fix and flip, wholesale, or just acquire for long-term cash flow purposes. So one of our students, as an example, acquired a 10-unit multifamily property, through some of these type of direct to seller marketing, not relying on the MLS. So ultimately, to answer the question, it doesn't matter what types of properties. If you're looking for owners of commercial buildings, mixed use buildings, office buildings, retail, you still can follow the same process of marketing directly to them. You may want to send maybe long form letters to commercial property owners as part of your marketing mix to more personalize, that are you selling message. But ultimately, you can market and target any types of properties that you want.
Okay, wonderful. I don't see any other questions, so I think that's it for today as far as the questions are concerned. What I want to do is get to our next slide and introduce our virtual summit, our virtual real estate investor summit. Investors Resource Summit. It's March 16th and 17th, so it's next week. You can go to our website at newviewtrust.com and register there. I encourage you to register even if you think you may not be able to attend both days. If you register, we will get the video recordings out to you as well. So please make sure that you register. We'd love to see you there. Next slide. If you want to know more about the self-directed IRAs or self-directed aspect, you can text SDIRA with your first and last name to 484848, and you will receive our self-directed IRA e-guide. That's my direct contact information on the bottom left of the screen, my direct line number here, and also my direct email address. Andre, thank you so much for your time today. I know I learned a lot. I hope everybody else did. And we look forward to seeing you in the near future.
Thanks, Lisa.
All right, you guys take care. Have a great day.